The framework and structure which we look at covered bonds and SSAs, which include agency bonds, are similar but subtly different. And the subtlety really focuses on the liquidity profile of the asset class. Covered bonds are much less liquid than SSAs, for example. But where we do look at it is from a relative value point of view is via asset allocation. So when we look at values of covered bonds versus SSAs or even senior financials, it's much more what stands out to us, what looks like good value, and where are we going to put the cash, rather than, say, a pure RV play, which we would do much more in, say, the EGB or the SSA space, where we go short and long different credits. This is much more an asset allocation RV rather than a pure RV. Well, I think we all have a responsibility to help promote the market, especially now as from summer of last year, it's grown and come more in focus to a lot of investors. Issuers have a responsibility in terms of helping the market become more liquid, and that really comes down to issue size. So trying to push for that 1 billion benchmark issue really helps, and it brings in a lot more investors who have minimum sort of issue sizes which they can invest in. From the bank's perspective, I think on the trading side, having SSA and covered bonds traded by the same market maker really helps, because it helps normalize the product as a rates product. It also helps highlight RV opportunities between covered bonds and SSAs, and helps introduce pure rates traders into that framework. And then the other thing is, from the DCM and syndicate and sales side, it's educating the rates market on covered bonds, whether that's through reverse roadshows or just highlighting the value of them versus other asset classes which they know their clients invest in. I think that's really important. And then obviously from the investor's point of view, we've got to put our cash where our mouth is also. There we go. Well, this is my first time attending, actually. As a way of background, Wellington have been large investors in the SSA market, and part of our success in the SSA market has been the really strong and deep relationships we've developed with the issuers. That's helped build a lot of trust and understanding. So my objective is to replicate that model, replicate that framework to the covered bond side, and build those relationships. A forum like this is a great example of bringing people together, bringing all the key players together, and having the ability to tap into that resource. I've had the pleasure of meeting 2 issuers already this morning. I've got more lined up this afternoon, and so far the meetings have been super productive. Also, I've got the privilege of being on a panel this afternoon, so it's going to be really interesting to see how other market participants look at covered bonds versus their own asset classes as well, just to get an idea of how people, fit it within their framework. So yeah, no, it's been an excellent conference, and I look forward to coming back next year.